Welcome to Manifested Publishers. My name is Mr. Dongo, a PFT, Public Finance and Taxation lecturer. Today, we will be going through August 2024 paper. And we start with question 1. Question 1A, explain the following terms used in public finance management. 1 is the consolidated fund services, and 2 is what we call division of revenue bill. So we come put the question. So question 1. So A, explain the following terms. Explain the following terms as used in public finance management. As used in the public finance management. So one is what A is consolidated. What do you call consolidated fund services. So basically, when you talk about a consolidated fund, that all government revenue are basically kept in account called a consolidated fund, except the ones that are not approved by the Act of the Parliament. So basically, when you say consolidated fund services, we basically mean, we say services. Services means the expenses. We say the expenses means the expenses of which is charged. The expenses of which is charged directly. We say directly against. We say directly against the and you say and payable from the consolidated fund, from the consolidated we say the consolidated fund, we say under the virtue, we call it under the virtue of the Constitution, under the virtue of the Constitution, or any act, we say any act of the Parliament, any act of the Parliament, other than, we say other than appropriation, other than the appropriation. So that is what we call consolidated fund services. So services basically means expenses which is charged directly against and payable from the consolidated fund under the virtue of the Constitution or any act of Parliament other than the appropriation. So then we have the second, what we call division of revenue bill. Division of revenue bill. When you talk about division of the revenue bill, we're basically talking about how revenue is divided at the two levels of government. That is the national government and the county government. So this refers to it's a bill that aim at. It's a bill, we say it's a bill that aims at equitable, what do you call equitable? Equitable allocation of funds between two allocation stock distribution of fund between two levels of the government. Between two levels of the government. Equitable allocation or equitable, just say the word distribution. Equitable distribution. Equitable distribution of funds between two levels of government, i.e. national and county government. National and the county government. So when you talk about division of the revenue bill, we're basically talking about how revenue is equitably distributed of funds between two levels of government. That is basically the national government and the county government. The national government and the county government. That is how basically we tackle that question 1A. We'll pick it on the next question. We say outline 5 purposes for which national government should borrow money according to the provisions of section 192 of the Public Finance Management Regulation 2015. So we put it down. That is B, question 1B. We say outline 5 purposes. Outline 5 purposes for which the national government should borrow money, for which the national government should borrow money according to the provisions of section 192 we say of the public financial management regulation. We call it Regulation 2015. So basically we are being asked by the examiner the 5 purposes to which national government should borrow money according to the provision of the section 192 of the Public Financial Management Regulation of the Public Financial Regulation of 2015. So basically, national government would borrow money for various purposes. One of it is to overcome budget deficit. One of the very common things about these developing countries, Kenya being one of it altogether, that is majority of the budget, most of the budget cannot be covered by the revenue. So one of the reasons is that they borrow to overcome a deficit. We also have another reason that we can talk about in case of emergency, so we can put them down. We have one, what we call financing the national, what we call the national deficit, financing what we call the national deficit. Deficit when expected expenditure is more than the expected revenue. The second is borrowing for the purpose, what we call borrowing for the purpose of the cash management, borrowing for the purpose of the cash management, borrowing for the purpose of the cash management, borrowing for the purpose of the cash management. Then we talk about honoring. Sometimes you find that the national government would borrow to pay back loans that are due. So we say honoring, what do you call honoring? Obligations, honoring obligations under outstanding, what do you call outstanding? Under outstanding national government, honoring obligations under outstanding national government guarantees. Then we can talk about the next, what we call refinancing. What we call outstanding debt. Refinancing what we call outstanding debt, or repaying what we call repaying a loan, to its date of repayment. Refinancing outstanding debt or repaying a loan to its date of repayment. So they can also borrow. We can talk about the lastly borrow in case of emergencies. They can decide to borrow in case of emergency. These are basically unforeseen events. So basically, this is the reasons that the national government will probably borrow in relation to the provisions of Section 192 of the Financial Management Regulation 2015. That is how we basically tackle that question. We'll pick it on the next question. We're being told Section 194 of the Public Finance Management Act of 2012 specify the functions undertaken by the Public Sector Accounting Standards Board. That is PSASB, Public Sector Accounting Standards Board. So with reference to the above statement, describe six functions. We put it down on the board. So that is C. So we talk about Section 194. Section 194 of public financial management of the Public Financial Management Act 2012, of the Public Financial Management Act of 2012. We say comma, specifies, the functions, specifies the functions to be undertaken, by public sector, the public sector accounting standards board. Public sector's accounting standards board. Into bracket, that is the PSASB, public sector's accounting standards board. So then you say with reference to the above statement, with the reference to the above statement, describe functions of PSASB. Describe the functions of the PSASB, Public Sector Accounting Standards Board. So number one is to understand what you mean by public standard accounting standard boards, and basically their role. We need to understand that this basically comes from topic 3, that is oversight of the public finance. One public sector accounting standard board is one of the areas of oversight one of the areas of oversight. That is basically one of the areas of oversight when you look at the Public Sector Accounting Standards Board. And basically, in going through these questions, in going through this particular question, it's very important that one of the roles of this Public Sector Accounting Standards Board is basically to set what we call accepted accounting and financial standards. One of it has a role in the bid for oversight. We call it set. We say set. Generally, what we call generally accepted. Set what we call generally accepted. Set what we call generally accepted. Accounting and financial standards. The word is to set. The word is to set. Implementation is not the role, but basically is to set generally accepted accounting and the financial standards. The next we can talk about prescribing an audit procedure which basically comply with the PFM, what is the Public Financial Management Act. We say prescribe, 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 prescribe. Internal audit procedures, internal audit procedure, internal audit procedure, basically to prescribe internal audit procedure, which comply with PFM Act. So basically, it prescribe internal audit that basically will comply with what called Public Financial Management Act. So we can proceed to the next. That is the third point on that. We say that they set this standard. They don't implement, but basically they set the standard. So the next we can talk about prescribe the minimum standard. What we call prescribe the minimum. We say the minimum. What we call the minimum standard. What we call the minimum standard. Prescribe the minimum standard of what we call maintenance, minimum standard of maintenance of what we call proper books of account, of maintenance of proper books of account. Minimum standards of maintenance of the proper books of account as the next role. Remember, they do the oversight role. And four, we can talk about what we call publish and publicize, publish and publicize, publish and basically publicize, and we say publicize the accounting, what do you call the accounting and financial standards, and the financial, what do you call the financial standards, and the financial standards, publish and publicize the accounting and the financial standards, and any directives, and any, what do you call, any directives, directives, and guidelines, and the guidelines prescribed by the board. Prescribed by the board. What do you call prescribed by the board? So basically, publish and publicize the accounting and the financial standards and any other directive that is basically prescribed by the board. So we have the next, perform. We can say that is 5, that you say perform any other function. Perform any other function. function, we say function related, any other function related to advancing, what do you call advancing, related to advancing, prescribe any other function related to advancing, financial, taking it higher, financial, and accounting, we say financial and accounting, perform, this is say perform, we just rub it and write it clearly, perform, any other function, this is say any other function related to advancing financial and accounting system management, and reporting in the public sector, and the reporting basically done in the public sector. So perform any other function related to what you call advancing financial and accounting system management and reporting in the public sector. And lastly, we say in consultation with the cabinet, secretary, in consultation with the cabinet secretary on the effective, what we call effective, on the effective dates of the implementation, in consultation with the cabinet secretary on the effective dates, that is cabinet secretary of finance, on the effective dates of implementation of the standards, we have not said they implement, but they consult on the effective dates of the implementation of the standards, and you say comma, gazette, the dates, we say gazette the dates for application, gazette the dates for the application of standards, and guideline. Again, very important for us to get to understand that when you talk about public sector accounting standard board, that's an oversight. So there are also various levels of oversight, that we basically have in relation to oversight. Also, various areas of oversight, apart from the public standards accounting boards, we have the internal audit as also an oversight. That's an area that can also be examined. So as you look at this, it's also very important to look at other levels of oversight. And I've talked about one as internal audit. And what is the role of internal audit? That is how we basically tackle that very question. We'll pick it up on the next question. That is question 1, Roman D, the last question on 1. So the question says, in relation to the public procurement and asset disposal regulation 2020, outline 5 methods that accounting officer or procuring entity or procuring entity may use to dispose the asset. So we have the question on the board. We say that is D. We say in relation to the public, what we call the public, in relation to the public procurement, in relation to the public procurement and asset disposal, and Asset Disposal Regulation 2020, Regulation 2020, outline 5, we say outline 5 methods, outline 5 methods that an accounting officer can, we say, use. 5 methods that accounting officer can use, that an accounting officer of we say of a procuring entity may use to procure, may use to dispose asset. May use to dispose asset. So when you talk about disposal, is how we do away with the asset. And when you look at this topic, that is basically topic 4 on procurement. So we are basically being asked that in relation to what you call the Public Procurement and Disposal Regulation, that is of 2020, what are the methods that that accounting officer of a procuring entity may use to dispose? To dispose basically is to do away with the asset. What are some of the methods that would basically be used to do away with the asset? One is, we call it a trade-in. We call it trade-in. What do you call trade-in? You know, you can have a new asset and you do away with the older asset. We call it trade-in. That is the first method that we dispose of an asset. So we move to the next. As we wrap this to the end. As we wrap this at the end. As we wrap this to the end. As we wrap this to the end. The next method that a procuring accounting officer of a procuring entity can use to dispose an asset, can basically use to dispose an asset. We talk about sell by public. What do you call sell by public tender? What do you call sell by public tender as another method that can be used to dispose an asset. Then you can also call number 3. What do you call sell? We say sell by public auction. What do you call the public auction? Sell by what you call public auction. Sell by the public auction. We also have what you call transfer. Another way for disposal, we say transfer. We can call it transfer to another, what do you call another public entity. Transfer to another public entity, or part, what do you call part of public entity, part of the public entity, with or without financial adjustments. With or without financial adjustment. With or without financial adjustment. We've talked about transferring to another public entity or part of public entity with or without what you call a financial adjustment. And lastly, what you call waste disposal management. What you call waste disposal management. Lastly, what you call waste disposal management. Waste disposal management. Very important for learners to understand that this is also a very crucial topic in the public finance. We need to understand even the role of IFMIS under this, the roles of a number of things. For example, IFMIS in relation to procurement. What are the benefits of electronic procurement as opposed to a procurement that was basically being done physically? What is the role? Pre-qualification of tender. What are some of the pre-qualifications that are required for tender, for the ones that are basically picked for tenders? Basically still touching on procurement. But particularly for this, we were basically talking about a number of ways that an accounting officer in a procurement entity may dispose an asset. We've talked about trade-in. We've also talked about sale by public tender. We've talked about sale by public auction, transfer to another public entity or part of public entity with or without financial adjustment. And lastly, we've talked about what we call waste disposal management. That is how we particularly handle that last question. And that marks the end of the question 1. See you in the next class.